The S&P and the Nasdaq both now at record highs, again helped along by a better than expected jobs report. Don't look now, but the S&P's up by 7% for the year after everything that we've been through. Doug Flynn, co-founder at Flynn Zito Capital Management, joins us just ahead of the holiday, and this was a good way to close it up. President got the one big beautiful bill passed, but I think more than that, that jobs report showed, I guess maybe some people are using the word resilience in the labor market. It was surprisingly strong. We still have some pretty steady job growth. What did you make of it?
It was, and you know what better way to celebrate America tomorrow and ending on a high note for the market in the U.S. And it really was on the better than expected jobs report. Also, the unemployment rate went down instead of up, which was the estimate, and initial jobless claims also went down. So you take all of that optimism on the U.S., which is what is kind of flowing through here to the market, against the backdrop of what we've been fighting, which is all the trade and geopolitical instability that we've had, and yet people are seeing through that and saying, you know, things look good for the U.S. and the companies in it. And I'm not so worried about valuations right now. It is priced for optimism. So, of course, this all has to come through to justify these valuations. But that's where we are right now in the market.
Priced for optimism. So the market's overvalued? Is that what you're saying?
It's only overvalued if not everything comes through. Yes, that will certainly come through. Yeah, no, I think it's if this comes through and the valuations are high, but the earnings on the companies as they start to really ramp up will drive down the valuations to more normal territory. So you can justify the market where it is. But it really is on the, you know, we had not a great number from ADP jobs yesterday.
Right. That's why today was surprising in some ways.
It was. And so as we've talked about, whenever we look at the two of these, you have to take them together. One versus the other doesn't really tell the whole story. So if we had two negative numbers, like we had a really negative number today, that would have put some pressure on Powell to consider lowering rates at the end of the month.
Now he's not. Trump's going to have to wait for his cut, right? I mean, that rate cut's not. When's that going to happen now?
Yeah, so, you know, at the end of September or mid-September, the market's saying it's about a 70% chance, and at the end of October, it's going to be more like a 90% chance. That's where it's priced in right now. I don't know. I think there's something to the effect of too late Powell, that he might wait too long, but he's really not really doing well with his own legacy here because of what he did with transitory, and now with this, you know, waiting too long is probably what he's doing. So we'll see. But this doing well for the labor market means that he doesn't have to be in such a rush. But our rates are too high. That's really no two ways about it.
Okay, so you think they should come down? Yeah, like you said, I don't think he's cutting anytime soon after what we saw today. But how do you look at this all big picture? Because there's still a lot of people that look, well, hey, what about the tariffs? That's still out there. There's a deadline next week. Could that still hurt the economy? Some people even look inside the jobs report today. We're going to talk about this a little bit later in the show. Like manufacturing jobs are down, so it's not like full-on strength across the board. There's some question marks. So when people look at where we're at, are you doing all clear from everything we were talking about earlier in the year? You know, wait and see. I mean, where are you at big picture?
Yeah. Definitely not all clear, and I don't think you really ever get to that all clear. Yeah. But what happens is, even in the numbers yesterday, if you drill down on them and you look at the smaller businesses with less than 50 employees, they break this out. They suffered the most. And that makes sense. If you have some tariff uncertainty, a lot of those very small companies were adversely impacted. Now, some of the unemployment numbers, on the other hand, are going to get a little screwy because this year we might have zero net migration in, or even negative.
Right.
And so that can affect, because, you know, when you look at the unemployment numbers, they don't care whether you're a citizen or not. It's just how many people are looking for jobs versus how many have them. And so there isn't the great dearth of extra jobs more than the amount of people looking for them. It's kind of come in line. And so there is weakening overall in the labor market. And so if that keeps up, that's going to be a cause to lower rates.
I think you're right. The immigration story is one we're going to have to watch really, really closely for impact, and also for how we interpret it, because is it skewed, to your point, a little bit by that. All right, last thing. The bill, the one big, beautiful bill the president talks about, they got it passed today, okay? That's probably our top story of the day. What's the economic impact, market impact of that? The tax cuts being extended, of course. I know there's a lot in there, but the tax cuts being extended has to be a positive, right?
The tax cuts being extended is just the future offset of extra money I don't have to pay. So there's not so much of a great.
Well, it would have been a negative if they had expired and went up.
Exactly. Now, on the flip side, the people that are going to benefit, with the tips and the Social Security and the overtime, even though that has some limitations on it, I think that's a net overall positive to those people specifically. And so it does get some more money in their hands. And so maybe that keeps the consumer in a better situation or offsets any of this potential tariff increase in pricing if we get it, because to this point we still haven't really gotten that.
Right.
And of course the wealthier people are going to be able to cover it anyway, so that isn't really the issue. So I think it overall is a net positive. We can debate whether or not it's actually going to have an impact on the debt and deficit and all of that, because as we know before, when they they lowered the taxes, we really didn't. So hopefully all good news for the 4th. Happy Independence Day.
Have a good one, Doug. Thank you as always. Let's